Weddings in India are not only joyous occasion but also moments when couples receive a multitude of gifts from family, friends, and well-wishers. While gifts are a gesture of love and blessings, it is essential to understand the tax implications associated with them. In this video, we will explore the taxation aspects of gifts received during weddings in India and shed light on the exemptions provided under the Income Tax Act. By understanding these provisions, you can navigate the tax landscape confidently and enjoy the gifts without any tax burden. Taxability of gifts under the Income Tax Act. The Income Tax Act, 1961, defines certain rules and exemptions related to gifts. Section 56(2), Clause 10 of the Act deals with gifts received by individuals, including those received during weddings. According to this section, gifts exceeding a certain threshold are taxable as income in the hands of the recipient. However, there are exceptions and exemptions for gifts received during weddings. Exemption for gifts received during weddings. The Income Tax Act provides specific exemptions for gifts received during weddings to ensure that the celebratory spirit is not dampened by tax implications. The exemptions can be categorized as follows. Gifts from relatives. Gifts received from specified relatives, including parents, siblings, and close family members, are fully exempt from tax. There is no limit on the value of gifts received from relatives, and they are not considered taxable income. Gifts from non-relatives. Gifts received from non-relatives during weddings are also exempt from tax. Case studies illustrating tax exemption on wedding gifts. Let's explore a few case studies to understand the tax implications and exemptions on gifts received during weddings. Case Study 1. Gifts from relatives. Mr. and Mrs. Sharma received gifts worth 10 lakh rupees during their wedding from their immediate family members, such as parents, siblings, and close relatives. As per the Income Tax Act, gifts received from relatives are fully exempt from tax. Therefore, the Sharmas do not need to include the value of these gifts in their taxable income. Case Study 2. Gifts from non-relatives. Mr. and Mrs. Kapoor received gifts worth 60,000 rupees from their friends and colleagues during their wedding. As per the exemption limit, gifts received from non-relatives on wedding are tax exempt. Also, please note that gifts received during wedding is exempt from tax. However, any income earned from those gifts is taxable. Example, father gifts a car worth 1 crore rupees to daughter on wedding. The car received as gift is exempt from tax. However, if the daughter rents out that car and earns rental income, then the rent income is taxable in the hands of daughter. Documentation and compliance. To ensure transparency and compliance with tax regulations, it is important to maintain proper documentation of the gifts received during the wedding. It is advisable to keep a record of the gift value, the donor's details, and any supporting documents if available. While these documents may not need to be submitted during the income tax return filing, they serve as evidence in case of any future scrutiny or verification by the tax authorities. Thank you, and if you like our information, then please like, share, and subscribe to our channel.